Well, thank you so much for staying with us in this edition of the show. Now, the Nigerian Bar Association and other civil society groups has called for an investigation into some controversies now surrounding the tax reform laws as introduced by President Bola Tinubu. There have been reports that the versions of the tax law released to the public differs from the version passed by the National Assembly. The discrepancies in the two copies have sparked a debate on the transparency of the legislature, with many stakeholders and many members of the public seeking clarity. In a statement released on Tuesday morning, that's earlier today, signed by NBA President Alpha Musigwe, the association noted that these mounting controversies question the credibility and integrity of the National Assembly. According to him, this development strikes at the very heart of constitutional governance and call into question the procedural sanctity and must be attended lawmaking in a democratic society. The statement read in part: to resolve these issues and address the concerns of many Nigerians who have been closely following this development, NBA has called for an investigation into the tax reform controversies. Well, let's get to understand all of the contending issues, what we should expect from January 1st, 2026, and all that is surrounding this tax law. I have in the studio live with me, he is the president of the Business Recovery and Insolvency Practitioners Association of Nigeria, also managing consultant Christian Pedabor, Mr. Albert Folorunsho. Good afternoon, Mr. Folorunsho. It's good to have you live in the studio.
Very happy to be here again and to have this conversation with you.
Thank you so much. Yes, we've been having this conversation for some time.
Yeah.
And I think it is first clear for me to start my conversation today. There are too many misconceptions around. Before I came into the studio, one of my bosses saw that I was going to discuss it, and he asked me that I should ask. My first question is, what really should individuals, or what do we as individuals stand to gain in this tax law if implemented by January 1st, 2026? Individuals now, not businesses.
Okay, thank you very much. As individual, you either do your business,
yes,
or you are an employee working for a company. Those are the two ways an individual can be subjected to tax on the income accruing to them. So, starting with employee, if you are an employee working for a business, working in employment, you are liable to tax on your income on the basis of pay as you earn, which means your employer has the obligation to deduct the tax upfront before you are paid.
Okay.
And come January, that's one of the most important things that has a provision of the law that will be starting in the first month of 2026. Yeah. The significant thing is the fact that depending on your income threshold, your tax is either going to reduce or slightly increase. Now, if you are a minimum wage earner, which means maybe you are on the 70,000, okay, which means per annum like 840,000 per annum, you are exempt. You are totally exempt. In fact, the provision of the law, Section 163, actually exempt minimum wage earner from tax. Now, the next thing is if your income or taxable income. So I also need to distinguish between income and taxable income. Income is your gross income, all right? Taxable income is gross income after you have deducted some allowances and reliefs that are available in the law. Particularly one, if you contribute to pension, you get a relief for it. If you make contribution for your health insurance, you get a deduction for it. If you borrow money to build your own house and you are paying interest on mortgage, the interest you pay on that loan is also deductible. All right? And specifically, those are deductions that you can take out of your income. So by the time you take this deduction from your income, the balance is called taxable income. So that taxable income is what is placed on the graduated taxable rate that determine how much tax is due on the taxable income. Now, if the taxable income is 800,000 and below, the rate of tax is 0%. Okay, so which means your income could be 1.2 or even close to 2 million, and depending on what you contribute to all of this, if at the end of the day the taxable income is 800,000 and below, you pay zero tax. Now, the next 2.2 million, which means if you add, which means for a person that earns 3 million, The first 800 is 0%.
Yes.
The next 2.2 is 15%.
Okay, the balance of 2.2 is what is taxable.
Yes, the balance of 2.2 is taxable at 15%. But if you now have income, the next 9 million, the next 9 million is taxed at 18%.
Okay.
So which means in totality, you now have 9 plus what? Plus initial 3 million.
Okay.
Making what?
That's 12 million.
So out of 12 million, the first 800, 0%. The next 2.2, 18%. Then we now have the next 9 million at 18%.
Okay.
I mean, the next 9
that
million.
Was 15, then 18.
Yes, 15 and 18%. Now, the next 13 million, which means the person is earning maybe about 25 million.
Per annum.
Per annum. I mean, in terms of taxable income now. Remember, I've already discussed the deduction that are available.
Yes.
The next 13 million, which means the person is on the 25 million. The first 800, 0. The next 2.2, 15. The next 9 million, 18. The next 13 million is at 21%. Now, after that, the next 25 million, which means the person is now on a total income of, on a total taxable income of 50 million. The next 25 million is taxed at the rate of 23%. Okay?
I get that.
18%, 21%, 23%. Then if you now earn above 50 million, if you earn above 50 million, any amount you earn above 50 million that is taxable is taxed at 25%. So by way of summary, for every individual that is being taxed as on their income, come January 2026, or maybe from the first month for an employee, if you earn 20 million and below, by the analysis that has been done, simulation that has been done, your tax is reducing. If you earn above 20 million, your tax will slightly increase. In terms of effective rate.
Okay.
When we talk about effective rate, we are saying the tax you are paying over your income. That gives you effective rate. And that effective rate will be on the reduction if, if you earn above 50 million. But if you are in business as a sole trader, we have spoken to being an employee.
Yes.
Now you are a trader, or you are in business, you are an enterprise, or you earn income from rent, not an employee. You are supposed to file a return, by 31st of March to say that this is my income, okay? And this is the expenses I've incurred in generating the income. In fact, in addition, I also desire some relief. I've made contribution for my own personal pension. All of those are going to be deducted from your income before this same tax table is applicable to the person. All right? And for a sole trader, I mean, there are provisions that are in place to determine the threshold. I mean, if your information is not available, we have presumptive tax, that they can apply a best of judgment, and that is only applicable to some taxpayers who have income but cannot does not have record to defend their income, or has failed to even file return. Those ones can be assessed on what is called the presumptive tax basis. In addition, there are some set of people that have also been excluded. The artisans, the petty traders, whose income are, below a certain threshold. I think, that is being worked out now by the subnational, the state government, okay, as to what category of traders fall within the presumptive tax and what category should be totally excluded. And I think they are looking at an income of about 25 million and below, which means you are a trader, you are earning 25 million and below, you should not even bother to be liable to tax. So that is what is expected as far as personal income tax is concerned. In addition, we also have the issue around capital gain. As an individual,
that's one big one too.
Yes, as an individual, if you make a gain on anything, just like your income is being subjected to tax, your gain is also subjected to tax. But if this gain is from sale of shares in the capital market, if the total turnover in a 12-month period, in terms of disposal of your share is not more than 150 million, and the gain is not more than 10 million, you are not liable to any tax on your gain. Or if you dispose of your shares in the capital market and you use the fund to reinvest in acquisition of shares, the gain is not liable to tax until you sell without reinvestment. So those are the things that are going to be applicable to individuals, in addition to the fact that individuals should have their tax identification number. As long as you have any business going, you should have a tax identification number, and this is for your benefit as well, so that you can make proper claim where it is necessary.
Now, you've taken 2 or 3 of my questions in one, honestly, I must say. But this misconception is something that is very worrisome. And I don't know what can be done so that this narrative is well shaped. We've had a series of engagements from the committee, but we still keep seeing different narratives online. What really are the concerns that you've heard as a close member to this committee?
Okay, so generally, nobody wants to pay tax. If I have my way, I won't pay tax. Even leaders of big countries, they don't want to pay tax. I don't want to mention names.
That's true.
All right, so nobody wants to pay tax, and this is a change. A lot of people are not too sure, of what really is coming. Number one, there has been misconception around my account is going to be frozen and tax is going to be deducted. Nobody can freeze anybody's account. You must have a genuine reason. Okay, they are asking for tax identification number because you may also need it to obtain your tax clearance. Tax clearance is still there in the law for individuals. Okay. And it is not something that will be very difficult. I understand the Joint Revenue Board are also working with the state to ensure that there will be seamless, uploading and pickup of tax certification number with the use of NIN, your national identity number. Okay, and with that, you don't even really need to worry. That will be made available to the banks, and then they'll just use it to tag your account number. Again, if you don't have income, you are not supposed to pay tax. If you receive a gift, it's not taxable in Nigeria. It comes under capital transfer tax, which has been abolished in Nigeria. So it is only genuine income, but that does not mean that your account should not be used to run family transfers. Tax authority will always want to see the quantum of transactions that are going through your account. They see them. And of course, if you can defend what goes through your account, maybe by way of loan that you are using for your business, it's not taxable. But anything that is genuinely part of your normal business, it is the profit that is liable to tax. And again, you need to keep record. I mean, you don't have to prepare an account as individual. You can just have your income and your expenses and your profit, and then you want to look at the threshold again. Remember, as a company that has a turnover of less than 100 million, 100 million and below, you are exempt from tax. In fact, you are not even required to file VAT return. It is the person that you are dealing with, that has the responsibility to self-charge. So you are absolved of all those responsibilities. Okay, so the concern again that has been causing controversy, like you said, they are the other side of it, which includes majorly the high net worth individuals and multinationals. If you look at the provision of the law, definitely you know that their tax may be increased. Like I said, if you are an individual, if you are currently on 18% effective rate, it may be going to as much as 23% for individual in terms of effective rate of tax. Okay, which is also significant. For companies, the issue around companies with turnover above 50 billion, which have to be concerned about the global minimum tax, whether you are a multinational or not, as long as your turnover in a year is above 50 billion, I beg your pardon?
50 billion.
50 billion, you may be exposed to the global minimum tax. Other than that, the old minimum tax of 0.5% on whether you make profit or not has been abolished. Okay, so the concern really, again, is on capital gain. The fact that most people don't really even pay presently. And the fact that government is saying, we have identified this and it is possible that you may have to pay particularly if you are a portfolio investor and you have not been paying. Government is saying you may have to pay now, particularly if you are exiting Nigerian market.
Okay.
The platform is to ensure that you pay a fair share of tax to Nigeria if you are exiting. Like I said, if you continue to reinvest in the capital markets, when you dispose and you reinvest, there's no tax until you exit finally. All right? And why did that provision introduced? It's not introduced, it's been there.
Okay.
It's just that the rate is now synchronized with that of the personal income tax and company income tax, which for me is still high in Nigeria, particularly the company income tax, which is still at 30%. But of course, the law says that it can be reduced to 25, but it has not been reduced. Even at 25 for capital gain, it's still high.
Still high.
All right? And that is the real concern of people. That's why the agitation is all over the place. Okay? People, government is saying that even that is affecting monetary issues because foreign portfolio investors may just exit. And when they exit, what do? They collect their money in dollars.
Yes, and that would affect.
It impacts on the foreign exchange.
Yeah.
All right? Those are the major concerns of people. And the fact that under the current law, most people are not even paying capital gains tax on their disposal in the capital market. And the fact that government is saying we are going to look at it, right? Yes, and a lot of people play in the capital market. But the majority of Nigerians that play there, they don't really deal beyond the 150 million that is exempt. Okay, so which means it is the big guys, boys, that are really affected by that provision, which is genuine. We really want the foreign investors to come in, and then we should introduce such provision. But like I said, the provision is there to be implemented, and if it is found really very anti-business, government can look at it again. All of those side comments around, okay, we can do this, we can do that, you can't do anything. The law is the law, and except there is an amendment, which can be done by the National Assembly.
We've talked about the new rent relief. I think you highlighted it in that first. Not really. Okay. We can touch on that, and also the issue about agricultural companies being taxed. Okay.
So the rent relief is just a provision that was included in order to capture more or less landlords that earns a lot of rental income and are not within the tax net. Okay. So what it means is that as a tenant, when you pay rent and you are an employee and you disclose the landlord that you have paid the rent to your employer, your employer can use that information to grant you a relief, which is subject to a maximum of 500,000. Which means if you take the income of the person, remember we said that from the income you take a deduction.
Yes.
There's some relief. So one of those relief is the rent relief of 500,000. So if you are a tenant, a tenant and you earn 2 million, and then you provide information as to how much you pay to your landlord, it's not the quantum of what you pay. It is the fact that you have reported your landlord so that your landlord can also be in the tax net and pay tax because it's an income accruing to the landlord.
Yes.
For that reason, the authority says that you'll be granted a maximum relief of 500,000. It has nothing to do with the quantum of rent. I've read in some places where they say, 500,000 is so small. It is just an incentive for you to report your landlord. For me, it's not even a relief. Okay, it's an information gathering incentive. For the agricultural companies, I think this is to promote agricultural. So agricultural companies, if you look at Section 163 again of NTA, Nigerian Tax Act, there is a provision under subsection 1. E or F at the end of in the provision that says that if you are into agricultural business, all right, for the first 5 years, you are exempt from tax. Okay. In addition to being exempt from tax, you can also approach the NIPC, who are authorized to manage the economic development incentive, which we used to call pioneer legislation. Okay, and you can enjoy tax relief for a specific period of time. All right. So for agricultural businesses, they are not liable to tax in their first 5 years. Okay, regardless of the nature of the agricultural business you are doing. And of course, they really don't even make profit during those periods. Those are periods that they start agricultural business also include animal husbandry. So if
Yes,
you're
it's
into
part of
poultry
it.
business, which starts, I mean, it doesn't take a long time for you to start, for the bird to start laying eggs. It's still part of agricultural business. Animal husbandry, plantation, cash crop, and all that. They are all from part of agricultural business. Cassava planting, maize planting, palm tree, and all that. So, for the first 5 years, your income is exempt from tax. And that is a very good incentive. So it's there in the law.
So I think a lot's been said now. Now some are even calling for suspension of implementation. And I heard Mr. Taiwo speaking, I think, on channels where he said that will really fault and affect so many things. Now, what do you think is the way forward, considering how can we address most of these misconceptions?
Okay, so maybe you are alluding to the issue around the contradiction.
Yes, contradiction.
Harmonized,
yes, and the gazetted.
Yes. Yes. So if I just go through the lawmaking process again,
go ahead, sir.
Is a bill is submitted by the executive. It can also be by somebody else. A bill is submitted by the executive, and of course, before the submission, a lot of engagement took place. I'm speaking to this specific law now, the tax reform law, and a lot of engagement were involved. The committee comprised of over about 89 people from different sectors of the economy, and several engagements took place, and the law was was submitted to the National Assembly, who started their own engagement
on it.
They carried out a public hearing, and at the end of the day, each chamber, the Senate
and the
House passed their own version of the law. And of course, when that happens, what do? They go into conference where they compare what they have, and they choose, they vote as to which one that they want to carry. And that is what is called the harmonization conference. At the end of the day, they came up with their own harmonized version. That is, for every of the section, is either you choose that of Senate or that of House. At the end of the day, they compile it, which is what they refer to as the harmonized version. And it is that harmonized version that should be, sent to the clerk of the National Assembly, that will be forwarded to the president for assent. And at that point, it's either the president assent or this withdraw assent, which means it is not for the president to start making any adjustment at that point. All right? And so that is what was expected, and that is what we thought was done. And then after the assent, what happened? The law has to be made public to the generality of Nigerians, so that we can start getting ready for implementation, such as preparing regulation where it is necessary, tax authority getting ready with their guidelines, other subnationals trying to work on other areas that are not covered, and all that. And yes, we have gazetted copy, and then a claim has been made by those who sat and voted for points that were carried in the law. And they have said some of them are not in consonance with what they passed. So somebody has made a claim, and of course, that argument is before who signed and who gazetted. All right, so how did you arrive at the gazetted copy that is different? That has been raised at the National Assembly, and we believe that it will be addressed. I cannot speak to what I don't know. For example, the harmonized copy was not made public. The bill that was sent to the National Assembly was published in their journal, and everybody have access to them. But the final one that they harmonized was not published in the journal, so it was only sent to the presidency. And so it is between the presidency and the National Assembly. And I believe that all the issues that have been raised, I don't want to start speaking to points that have been raised in the social media. I can't start saying or justifying or saying why. The question is that there should be no amendment, there should be no alteration. It is what the National Assembly passed that should be gazetted. And so if there are allegations of that nature, that should be resolved. But to a large extent, as far as I'm concerned, from the issues that have been raised, that is probably not going to stop the law from being implemented. For now, it is the law, okay, except another bill is sent to the National Assembly for amendment, or they decide to amend any of the provisions on the basis of these issues that have been raised. And of course, they can insist that, see, this your gazetted is not what we what we pass. This is what we pass. Can you go and gazette it? All right, as long as you are not withdrawing, you are not denying assent. That can be done as quickly as possible. That does not take away the fact that it is against the law. I've heard senior lawyers spoke about it, and I agree with them. It speaks to constitution issue and all that. But in terms of various items that have been raised, I mean, I can't be until it's made public. I can start speaking to issues that have been raised. Other than that, I think the law is good.
Finally, what would you have to tell Nigerians more about this law as we expect implementation by January?
All right. So, as we go into implementation, for me, I believe Nigerians do not have to worry. I don't see too much of issue, particularly in 2026. Now, when you talk about implementation, which won't actually start implementation in January or in 2026, they are the transaction taxes, the pay as you earn, the value added tax, okay, which has, I mean, everybody is in a hurry to implement that VAT because you are now able to take deduction for your input VAT on all form of input VAT, on your asset, on your goods, and on your overhead. All right, so those ones are starting. The other ones are the ones applicable to companies because those are the ones that are even significant, as well as the capital gain. All right, those ones are, for me, as far as I'm concerned, you cannot implement in retrospective, which means they are only applicable on transactions in 2026. So for companies, the law should have serious impact on their profitability when they are filing their return in 2027. Okay, and so there is and we are still hoping that even the corporate tax rate will be dropped to about 25, as already started in the law. So by the time you are filing your return by June 2027, we hope that the corporate tax rate will have dropped to 25, and then you will now be using that 25 to assess your income in 2026. The same thing applies to individuals like me that are in a partnership. Okay, my income in 2025, which I've already earned, I've spent. You cannot start applying the law of 2026 on income that I've spent. So I expect that that provision will start on my income in 2026. All right, and then when I'm filing as an individual a return in 2027, individuals should file their return latest by 31st of March. By the time I'm filing, oh, this is how much I've earned from my partnership, I should be applying the rate for 2026. Not that you apply 2026 rate on my 2025 income. There are cases or specific case that has spoken to that, and I believe that Nigeria does not have to worry so much. I mean, there's so much controversy. The genuine one is the one about alteration, which has to be addressed. But in terms of implementation of the law, as it is, other than those areas that have been controverted, I believe it's not something that we should worry too much. Honestly, we should take advantage of them.
It's been an interesting one, and I think as implementation goes on, we'll still have to follow up all of these conversations now. Yeah. President of the Business Recovery and Solvency Practitioners Association of Nigeria, and I must congratulate you on that new role.
Thank you.
Congratulations, sir. And Managing Consultant, Christine Pedabo, Mr. Albert Folorunshaw, always giving us insights into issues around this new tax laws and what we should expect. Thank you so very much. Merry Christmas.
Merry Christmas. It's always my pleasure to be here as well.
Thank you so much.
Thank you.
All right, then we'll take a break.